Now, Nigeria's Tier 1 lender, FBN Holdings, has recorded a 17% increase in profit before tax at 60 billion naira in the first 9 months of 2019 from 51.3 billion naira in the corresponding period last year. In 9 months, 2019 profit after tax increased by 15.3% to 51.8 billion naira from 44.9 billion naira recorded in the first 9 months of 2018, while total assets also increased by 3% to 5.7 trillion naira from 5.6 trillion recorded a year earlier in December. And another Tier 1 bank, United Bank for Africa PLC, has announced impressive performance in its unaudited 2019 third quarter financial results. Gross earnings rose to 428.22 billion naira, representing a 14.2% increase. This profit performance puts the bank's annualized return on average equity at 20.6%. And Chika Mbonu has more on all these results. Chika, good morning. It's good to have you,
morning.
As always. So, first quarter results on First Bank. We start off with First Bank. And so, what are your thoughts? What do these numbers tell us about FBN performance in the economy?
Yeah, I think the major thing for FBN in this quarter three is the fact that their risk management processes, the changes that have been made, that making the risk management processes are showing the results. Yeah. And the NPL have come down from about as high as 20% in last year, by December 2018, to about 12.6 now, which is very, very, very good. And then also the other thing that's happened is you can surmise from the result. Yeah. It have worked assiduously to diversify their earnings base, revenue base. So if you look at the gross earning is flat. On the net income, operating income line, quarter on quarter, compared to last year, it was actually a negative growth. But what compensated for that, as I said earlier, was the fact that they have worked very hard to get their loan books right. And they saved almost about 48 billion in loan provisions, so which came down by about 62%. So that was what actually impacted in the 17% growth they had on profit before tax. So for First Bank, is the fact that the risk management processes are working. They are clearing their legacy loans that they have been dealing with for some time now, and they hope that by the year end, this NPA ratio will come down to about 10%.
Very good. Now, Chika, I'm sure you'll agree with me that for the past several months in this year, CBN has had to come down hard on the banks with a lot of policies, as it were, and we've seen some form of compliance in that direction. So what is this First Bank result telling us about the Nigerian economy, especially the financial sector? Well,
you will see for First Bank, the core result is struggling. It is on the operating income line, is struggling. You know, compared to last year, it actually fell. But the issue was in the recoveries, the loan recoveries, they made a lot of money. Okay. Balance sheet sides, customer deposits for First Bank grew by about 5.3%. Now, but what is interesting is, unlike last year when loan books didn't grow, now compared to December 31st, 2018, the loan books grew by about 8%, which is what CBN has been clamoring for banks to do, because we require loans to grow the economy. True. So for us, for the economy, that is good. That the fact that loan book, even the deposit just grew by mere 5%, they grew their loan books by about 9%. So that is good. Okay. For First Bank also, because of the kind of result they have had, their return on equity, which is like if an investor, or just on pedestrian level, if an investor gives you 100 naira for the year, how much they return to them? It is improved from about 8.7 to 12.2. So First Bank has been working very hard on that. And the gross loan to deposit ratio, again, for them, actually fell. But I'm working on that. And as I said, the major issue for them in this result is the fact that the NPL had actually gotten better. Okay. And that's what First Bank is working on. So consistency is key here. Very good, Chika. Now, let's take a look at the United Bank for Africa. That's UBA. What are the key highlights of the third quarter results? UBA is on fire. UBA is on fire. UBA
Red
is on fire. UBA is on fire. Because on the core business, unlike, remember when I thought about First Bank, I said on the core business, with the operating income level, they had a negative growth. UBA is actually grew their operating income by more than 12%. Okay. On gross earnings, about 14%. Whereas remember, First Bank was flat. So UBA has been on fire. Now, though the deposit growth was flat, just very, very flat, or less than 1%, UBA at least based on CBN drive, grew their loan books by about 15%. So that was, so the Central Bank of Nigeria will be happy with this kind of UBA result because their loan books actually grew by about 15%. So the profit before tax, as I already mentioned, grew by about 24%, which is very good. Now, the other thing that happened here is the shareholder fund also grew by more than 10%. UBA, because of the drive they have been having, UBA have been focusing on efficiency. And so they were able to push their cost-to-income ratio. Basically, for every 100 naira they earn, how much do they spend to earn it? So last day, it was about 63 naira for every 100 naira they earned. Now they're able to bring it back down to about 61 naira. For that kind of size of balance sheet, this is major. And of course, that has a salutary impact on their return on equity, which increased from 15.8 last year to 20.6 this year.
Very good. And we can see a lot of innovations, for these banks to keep up with the momentum. So in terms of strategy, how do you think the bank compared with First Bank? That's UBA.
Yeah, you will see that First Bank has been battling with legacy loans, trying to, get their loan books, clean up their loan books. And that has hurt them. And then if you have loan books that are not performing, what will happen is that you don't have earnings on them.
Indeed.
Not surprisingly, therefore, that the net interest income for First Bank actually fell. Now, compare that to UBA. UBA has a decent NPL. The non-performing loan ratio is good. Again, UBA is in 20 African countries, and there have been a major drive for them to, press out more from these countries. And so you can see the impact. Where other banks are struggling on the net income level, UBA has been growing. And what other banks are struggling with single digits growth on their PBT, UBA is having single digits. So UBA is actually on fire. UBA is actually on fire.
Indeed. So what is the outlook for the bank for the rest of the year, you think?
Yeah, the next quarter is like the year end, and what normally happens is that on the business side, things actually, get more. People plan for the end of the year and consume more. So you expect that activities will grow, get more. And usually banks make a little more money by the third quarter. But also, in the past, it used to be also the quarter that banks used to clean up their books for the year end. But because of the issue of IFRS 9 that we talked about at the beginning of the year, a lot of that has happened in the course of the year. Banks' books are clean at this time. So I believe that the result for UBA in the next quarter will be higher than what they have now.
Very good. Just a one-off question here. We've seen the first tier bank engage in a lot of competition, a lot of innovations to stay afloat, and of course to be ahead of their game, as it were. So how would you assess based on what we've seen with the First Bank and of course the UBA in meeting up with their targets, and of course with CBN breathing down their necks every now and then?
The general strategy is for everybody now is we're struggling with our net income line, net interest income line. So let's push our fees and commission line. So constantly for all the banks we have analyzed, even though they lose money on the net interest income line, or they make less money there, what happens is that fees and commission line, all of them are pushing for that. And that ties into the fight that you see that the banks are fighting with the telecom companies on the USSD.
Of course.
Now, because, for example, UBA, looking at electronic income line, fees and commissions only, contributed about 30% of their fees and commissions. So that's major for most of the banks. If you go through the GTs as then it's about a ratio. So they don't want to share with it. So a lot of them are pushing for the electronic banking platforms to make sure they make more money from that. And that's basically why this is a major issue now. They don't want to share the money with the telecom companies.
Okay, but just a one-off question in like 10 seconds. How do you see the recent rift between the bank and of course the telcos, on this matter?
Yeah, the telcos need the banks to ride. The banks need the telcos to ride. So they have to meet together with central bank and the other stakeholders and make sure they resolve this. That's what will happen. The issue that the banks, once the money has come in, banks don't want to share. So they are telling the telcos, these are your customers. You normally decide, we don't tell you what core rates you're going to determine. USSD is your service. You want to charge the customer's charge, you determine the rate, but don't touch our money while already charging our customers. That's basically what's happening.
And indeed, in 30 seconds, the loan-to-deposit ratio, how would you rate the performance of banks and their compliance rate?
It's increasing. You remember that it took for 11 weeks, banks were able to grow their deposit, the loan portfolio in the Nigerian banking industry by almost 900 billion, which is major. Now the ratio will move to 65% by December 31st, 2019. we do believe. You can see that the banks have analyzed.
Okay.
The loan books grew. First Bank by 8% and UBA by 15%. That will continue.
Some positive things there.
Yeah.
Chika Mbonu, many thanks for your thoughts on those issues. Good to have you.